Hey everyone. All right, so here's what we got to look at going into this week here. So it's Sunday the 12th, November 12th. The the broad benchmark here, the S&P 500 looks good, right? It's moving higher, but it's really overbought and there's this what I would call a flight to safety going on where the same thing happened like 4 or 5 months ago and it was ahead of a little market downturn, and the same thing happened going on 2 years ago, which was more dramatic then, and it was the very end of the bull market. So I'll tell you what I mean. So here's the S&P 500 going up, overbought, right? Broke out, but overbought. Probably a good chance there's going to be some resistance around 433 because it was support, and there's people who bought back here, believe it or not, who are still in their positions that are waiting for it to get back to 443 so they can sell and get out at break even. So a lot of times at support levels, they convert into resistance levels because you get these remorseful buyers trying to sell. All right. We see it right here. Support here turned into resistance over there. So looks good on the surface. And if you're invested in the right place of the market, it is good. We're going to go to the tech sector, biggest sector in the market. Look at this. Now, this is really ripping higher, getting to the point where it's overbought. Overbought means that something is just really above what would be its typical or normal trading range. And this gets the attention of a certain type of trader because a lot of Wall Street strategies or trading strategies based on this concept of reversion to the mean. So if something gets really overbought, there's a chance it's going to reverse. In this case, it's a move lower. And at the same time, there's a chance we're getting to a resistance level. Resistance is there's people who bought back here who are going to be trying to sell here because they've been underwater ever since. So a resistance level is when you get a level where there's more sellers than buyers. So the market's going up, we get to resistance, stops going up. Good chance there's going to be resistance here because we get remorseful buyers from here finally trying to get out of break even. Also overbought. But here's what I want you to pay attention to. Or this is kind of the key here, right? But what I want to talk about tonight is this what you could call like a flight to safety. As a matter of fact, you could definitely call it a flight to safety. And sometimes these flight to safeties happen um, right before markets find tops. So this is the Nasdaq 100. You've all heard of it. It's the Qs. People call it the Qs. We're going to look at the top holdings here. So the Nasdaq 100, it's the biggest 100 stocks in the Nasdaq that aren't in the financial sector. 100 stocks, 100 stocks. That's why it's called the Nasdaq 100. Look at this. Apple, Microsoft together are 21%. 100 stocks, two of them make up 21%, one fifth of the benchmark. 100 stocks, there are two that are 20% of it. Is this right? Is this wrong? No. It's just the way it's made. It's because these are done by their market capitalization. They're that big. And then if you look at Amazon and Nvidia, right, you get to 30%. So you got four stocks in a 100 stock benchmark that are 30% of it. Now, why is that important? Well, because it kind of masks some underlying weakness that could be going on. Now, I'm going to bring up that Q ETF. Looks great, right? Ripping higher. And if you're in the right stocks, if you're in Microsoft and Apple, that's great. Just be careful because they could turn really quick. So here's the NASDAQ Qs 100, Microsoft, Apple, 20%. Look what happens when we look in the ETF that every stock is equally weighted. Every stock has the same weighting. Apple and Microsoft don't dominate it. Whatever the 100th or 99th small stock are, it's the same weightings. Going lower. NASDAQ 100 equal weighted going lower. NASDAQ 100 market cap weighted, going higher. Now you're like, well, what the hell? Big deal. Well, if you're in the big stocks, that's great. But what I'm saying is this is masking a lot of weakness. Think about it. You got 100 stock index. You get 2 stocks that are 20% of it. Theoretically, money could be coming out of 70 stocks. 70 stocks could be going down. 20 stocks could be not going anywhere, just flat. Money from the stocks are going down can go into those top 10. Because of the weightings, they can make the benchmark move higher, right? So what I'm saying is it could mask underlying weakness. And that's what's going on now. Now, I would like to bring you back to the end of 2021, which was not that long ago, 2 years ago, and we are going to look at the S&P 500, which is the most important of the Wall Street benchmarks or indices. Okay, S&P 500 going back to 2021. Now, the end of 2021 was the end of a bull market that had gone on for 10 years. COVID was obviously a terrible, tragic thing. But in the terms of the stock market, it was really just a blip on the radar screen. So basically, the market had gone up for, I don't know, 10, 12 years. Here's the very peak. This is the very end of December of 21. This is the beginning of January of 22. All of a sudden, it's inflation, and then we got the, Ukraine war. Notice where this market peaked. The top, the very, very top. Okay. And very, very end of December and January. End of December of 21, beginning of January of 22. Now, let's go back to our NASDAQ 100. Remember, this is the ETF where Microsoft and Apple are dominating. Look at where it peaked, right at the same place in December. Okay, now you're like, well, I don't care, Mark, this is getting boring. Well, check this out. Here is the NASDAQ 100 where everything is equally weighted. Look at where this peaked. Fully a month before, okay, November of 21. The equally weighted NASDAQ 100 peaked a month before the NASDAQ 100 did. It was a sign that the market was deteriorating. This kind of ruins the dramatic effect, but you get what I'm saying. Now, why is this? Well, this is because people are starting to freak out, and basically what they're doing is selling most of their stocks, the ones that are not the top NASDAQ 100, but maybe the top 50, 60, 70, and they're putting their money into the big names. Apple, Microsoft, it's a flight to safety. They're like, I'm insured these other parts of the market. I'm going to go into these big companies that are safe. In the old days, flight to safeties were like into gold, right? So what I'm saying now is the market's going higher, but most of the market looks weak, except for the magnificent or majestic 7, whatever the hell they call them. All right, so make sure you check us back out this week because we're going to follow this. I'm not saying the market's going to turn tomorrow, but my suspicion is the next week or two, we see a reversal and a pretty decent move lower. All right, thanks, everybody. I hope to see you soon.